Last week, online retailer Jumia Technologies shut down its e-commerce operations in Tanzania, saying it needed to review its portfolio and focus its resources in markets that bring the best value. The decision by the e-commerce company to exit Tanzania came less than 2 weeks after the retailer closed shop in Cameroon on November the 18th. Jumia started out by dominating the African e-commerce space and was even referred to as the Amazon of Africa. However, over time, the company has encountered its fair share of challenges, which have seen its stock fall from a post-IPO peak of $49.77 which saw its value at nearly $4 billion to a current price of $5.75. Check the current price. Now, joining me in studio to help us understand what is happening at Jumia and the e-commerce space in the continent is Peter Ndiagui, who is ex-OLX manager and e-commerce platforms and also marketplaces entrepreneur. Peter, thank you for making time.
Thank you.
The online e-commerce space in the continent is really interesting. Jumia came in and they grew very rapidly because they saw an opportunity and came into the market. However, there have been arguments here and there that to grow an African business, you have to understand the African market. So kindly put it into context for us. How does the African e-commerce market look like?
Well, I think the e-commerce markets in Africa, generally, whether it's Sub-Saharan Africa, including North Africa, is still quite robust. I mean, if you just look at the last statements from Jumia, for example, you can see that the order numbers have been growing. So I don't think we have any problem with demand. The demand is significant. And put it in other ways, is there demand for people to order things remotely that can be delivered to their homes or offices or where they are? I think there's significant opportunity for that. So let's rest the question of demand. I think the demand is significant. What might be a challenge? We can look at it in three forms. One, obviously there are structural challenges that everybody talks about them. One is the low per capita income in most countries in Africa, and that does drive the level of value that you can see in a specific order. Number two is the logistics fragmentation in most of the markets. For sure, the addressing system might be challenging, but even the players within the logistics environment are also challenging.
Okay.
I think the third thing is also what we can call personal financial challenges. And this comes back to the low per capita income. So you find that people have income, yes, but the discretionary income sometimes is just not there. So that somebody can order something today, but in 5 days, a relative needs support for a funeral or something or a wedding, and then by the time you deliver it, they just give other reason, but it's just because, well, the money wasn't there to pay, and the credit card penetration in this market is super low. I think it's 2%. So those are kind of structural challenges I would talk about.
Yeah.
The other part of the challenge is what I could call investors' myopia.
Okay.
And that is largely around what kind of capital is flowing into e-commerce in Africa. Is it patient capital for growth and patient for profit, which would be most preferred? Patient capital for growth, but impatient for profit at the unit level, which would be most preferred? Or is it impatient capital for growth and patient for long-term unit economics? I think it's the latter that we have seen more, and that's a problem. So those two things do drive the behavior of these firms. And I think what we are seeing with a lot of e-commerce firms, we think their business model is a fair bit of a copy and paste of a business model adapted from the West into Africa, and the conditions are different, which means that the business model needs to be adapted to some of the nuances, and there are big nuances within Sub-Saharan Africa.
Okay.
All the structural issues I talked about are opportunities for innovation. But that gets missed out when it's about copying and paste something that existed somewhere and bringing it to the market. And at the same time, you are doing it with impatient capital for growth.
Okay. Now, I want to bring Jumia into this conversation. And we saw in a span of 2 weeks, they shut down in Cameroon on the 18th of November.
Right.
2 weeks later, they're shutting down in Tanzania. What would be your hypothesis for this move by Jumia? For them, they're saying they just want to manage their portfolio, tone down the risk, and just operate in markets that are profitable.
Well, I think if you really look at it, there are probably three things I see there. One is potentially market pressure, as you can see from your just what you mentioned about the stock falling. There could be pressure. Okay, then we understand that we might have to make some losses before we see us being somewhere that we are profitable. But what's the path to profitability? Are we clear that in the next 2 years, we're going to start seeing you guys in the black? That's number one. Number two could be competition. I roll that out because if you look at those markets, really there's probably no one else who has the scale that they do. The third thing is also management attention. You have this need to focus and be profitable. And there are these markets that they are great in the future, but for now, they probably are not going to cut in enabling you to be profitable. But they still need management attention for them to be managed in the growth. So those could be my reasons of why there is that pressure. And I fall to market pressure, investors' pressure, show us a path to profitability.
And how would we explain the tanking of the share prices from 49 to about 5%? That's a very huge drop. And previously, it was being argued that they were going defensive by listing on the New York Securities Exchange and also just expanding into other African markets. But now it looks like the rain is beating them on all fronts.
Yeah, I think if you look at the stock market or the public markets, is not the ideal place for a business that is trying to get itself out of losses into profitability. And that's why private equity firms come out to help in taking some of the entities that are public to go private so that they can be able to manage without the pressure of the equities market. Remember, equities market participants are fund managers who are under pressure also to deliver on behalf of pension funds and others. So they will keep the pressure to drive profitability. So I think that was it by itself a huge challenge. And it's not only Jumia, to be honest, that is having that challenge. We've seen a lot of other firms that are facing the same challenges of going public while still loss-making, in the public market starting to react, or show us the money, show us some black, show us the path to profitability. While when they were private, because the information was not public, then and there were no public investors, then they could hold on for the loss-making for a while. But I think for now, the pressure is on. Yeah.
And I want us to stay with the challenges because demand is growing, because if you look at orders up to 95.2% year on year, okay? However, average orders value dropped by 29%. So it's kind of a mixed reaction. But the e-commerce space does not operate in solitude. There are different factors that contribute to the success of the e-commerce sector. Let's start with data charges and connectivity across the continent.
Correct. Right. I think that's a big one that is sometimes ignored. And if you look at affordability in terms of data, it has actually improved significantly in almost all the African markets, I think, except DRC, where the charges compared to the income per capita are still quite high. So relative to when the market started seeing e-commerce firms at scale, which was about 2012, 2013, up to now, has really improved. But what does also mean is that a lot of money has been burnt along the way from that period of time up to today. So the time to invest big bucks seems like it was not yesterday, but it probably is today. If you look at smartphone penetration, internet usage, which is driven by data connectivity and the charges, I mean, like those two being key drivers of access. But also the other thing is, if you really look at the USSD as a way to access platforms, I don't think we've seen a lot of the e-commerce players trying that as a way of accessing the platforms by avoiding the huge internet data charges.
You look at a market like Tanzania, for example, Kenya, you've said 2% credit card penetration. In a country like Tanzania, credit card is not
much lower.
Yeah, because the banks prefer a debit card, okay? If you look at other African countries, Kenya has had M-Pesa for a really long time. Hence, that trust with digital transaction has really grown. However, this remains a challenge in many other countries that Jumia is also trying to operate in. And the model of cash is king is not necessarily working in the e-commerce space.
Yeah, and that is a very, very interesting challenge because it's also driven by trust, right? So you find that even people who might have a credit card, they might not pull in the card on the platform and prepay for their goods. They will wait for the goods to be delivered and then they'll pay, something called COD, which is cash on delivery. Now, cash on delivery is impacted significantly by what I talked about earlier, the nature of cash flows within our economy, that somebody ordered something 5 days ago, the cash they had to pay for that item has already gone into other uses, and they don't have access to credit to be able to pay for the item and then pay for it in another day. Now, what does that do? What that does, it actually drives a lot of returns of items, especially in discretionary categories like fashion and electronics. Now, if an item is returned, then the cost of returning it and delivering it, and nobody picked it up, drives the cost per order significantly. And that just means that most likely at the unit level, you have these challenges where those orders cannot be profitable at a unit level because of those kind of logistics challenges.
So what does this say about the e-commerce model and adoption in the region, bearing in mind that other places where e-commerce has been there for a long time, the markets are very consolidated, Europe, Asia, but if you look at Africa, the market is really fragmented.
Yeah, so exactly. So from a logistics point of view, the challenge there is that the model needs to evolve a bit. And if you look at the pointers to that is, one, people, when they order things in our market, most of them want those things delivered as soon as possible. Why? Because as we see, we have the cash to order now and we want it now. So the time to deliver needs to become smaller and smaller and smaller. It needs to be quicker. And so therefore, the logistics operations need to evolve to something that can help the quick turnaround time in delivery.
Okay.
And that's, for example, what we are trying to do at GoBeba, that you can get something delivered in about an hour. Now, when that happens, the trust also starts to improve significantly, because then somebody knows, okay, I ordered what I ordered and I can get it in an hour.
However, Peter, how do we reinvent logistics to ensure that you can get it as soon as possible?
Exactly, that's where I'm going. So look at the copy and paste model of most of the e-commerce businesses, that where you have this centralized warehouse that things get picked up from there and then they go to a customer. Now the radius of delivery is, you're talking about kilometers in the 50s, in the hundreds from the centralized warehouse. Then you're also talking about aggregating orders into a truck, and then they'll take a certain path and then come drop shipping them. Now, I just think that that model does not innovate itself to be able to offer at quick turnaround time. But distributed logistics, where there could be smaller stores or warehouses that are that are around suburbs or shops that become pickup points, really drives that turnaround time. So the e-commerce model in emerging markets needs to take into context that logistics needs to take a different form and shape. Yeah.
Okay, and for those who are willing to venture or hoping to venture into the e-commerce space, what are some of the key things that they should have at the tip of their fingers?
Actually, I do think that most of the entrepreneurs that might be getting into the e-commerce environment now, like ourselves, have a much better insight of what works and what doesn't work. So there are lots of learned lessons that they can pick from that. Obviously, some of the other things they have to confront is investors having a challenge with what has already happened. You know, does this really work? Like you're questioning. And so they have to contend with that. And so that means that they have to approach it differently. They have to show why what they're doing will be different from what happened in the past. And I think the good thing is that the customers have already been educated for them. So they just need to pick up from where the customers might have been not happy with their experience because of either turnaround time and do a better job.
Finally, as we almost come to a close of this conversation, there are markets that are doing really well. Egypt, Nigeria, and Kenya by fair right. What are some of the factors that are enabling e-commerce to pick up really well in these countries?
I think Egypt, Kenya, Nigeria, the factors I talked about earlier, you know, structural factors, are becoming lesser and lesser day by day. You know, you can see a number of logistics startups have already started to consolidate what you were talking about. For example, in Kenya, the same thing is happening in Nigeria and Egypt. Venture money is also pouring in to enable those areas that e-commerce firms might not have been able to enable, whether it's logistics, whether it's fintech like payments in Nigeria and also in Egypt, where M-Pesa did not take root before. So that has really improved the environment, and it's going to continue improving over time. So it is not that bad. I think it's good to reflect on some of the things that might not have been going well, but I think the future is very, very bright.
Okay. As we come to a close, at a recent press conference, Jumia CEO said, and I quote, "E-commerce marketplaces are very powerful engines to drive payments. Everywhere in the world, some of the leading payment companies were born out of and grown by marketplaces," end of quote. Now, do you reckon that this model will be Jumia's silver bullet? And is this the direction that e-commerce startups should definitely maybe look into? For example, they're thinking of Jumia Pay.
I think there's some truth into what he's saying. If you really look at the emergence that eBay did end up giving birth to one of the most successful payment startup in the world, and so therefore I do think there's an opportunity there also for them to diversify the sources of revenue. Everywhere you have a trade or a transaction, almost always there's a place for financial services to be in there, and so therefore both payments and also lending, as we talked about earlier, are significant opportunities. Now, there's a caveat to this. As I said earlier, VC money is pouring into payment startups already. If you look at this year so far, about $1 billion has been put into VC money in Africa, and a large portion of that money has gone into payments. And so therefore, as Jumia gets into payments, there are also other startups that are also well-oiled in terms of funding. And they also started out as a payment startup with a very clear path, also moving into e-commerce. So they're not just payment startups that are going to remain in payments. There are also payments that are pointing at e-commerce as a way to succeed. So I think great idea to start focusing on that area, and I would say both payments and lending. but also to note that there are other even more oiled startups financially that are also starting to look at that area.
How about B2B, like AliExpress?
I do think that that's an area that actually has been neglected in the e-commerce space, and it is also because businesses usually tend to follow what consumers do. So B2B e-commerce, even in the US, even in China, came in after B2C adoption was significant. So I think B2B is starting to become something that is a pretty good opportunity. And if you look at the verticals of B2B, you can see agriculture being a pretty decent vertical. You can look at even drinks having a bit. Anywhere there's a fragmentation of either mama mboga or a small kiosk that buys from a wholesaler or buys from a manufacturer does provide a great case for a B2B e-commerce business to exist.
Peter, before I let you go, 30 seconds, camera 3. What's the outlook for the e-commerce sector in 2020, and should investors bet their money on that sector? 30 seconds.
I think great opportunity, huge lessons learned in the market in the last 8-9 years. And I think with those lessons, we are starting to see a good view of what it takes to move an e-commerce startup from just a startup and a very clear path to profitability. And I think that is not going to go away. We are where China was in about 8-10 years ago in e-commerce. So where the next Alibabas of the world are going to be born is actually right here.
Well, from what Peter said, maybe what we can gather is patient investment capital and patient profit. That is the model that will get us to where we want. We are where China was